After years of building a global investment platform, the Public Sector Pension Investment Board is beginning to shift its gaze inward, marking a strategic turn toward the Canadian market as geopolitical risk and volatility across the US force a reassessment of long-held allocation priorities. According to their annual report released Friday, the Montreal-based pension fund manager, which oversees nearly $300 billion in assets, posted a 12.6% return for the fiscal year ended 31 March, driven by strong gains in infrastructure and public equities. Yet beneath that headline figure, a deeper story is unfolding, a pivot to home territory. We're focusing efforts on finding good investments in Canada, said Deborah Orida, Chief Executive of PSP Investments, speaking at the release of the fund's latest annual report. The most prominent example of this redirection is PSP's recent acquisition of a 7.5% stake in the 407 Express Toll Route, a major arterial highway traversing the Greater Toronto Area. The transaction, valued at more than $2.4 billion, including deferred payments, is the fund's largest ever Canadian investment. For much of the past 2 decades, PSP has expanded globally, amassing holdings in private equity, infrastructure, and credit across Europe, the United States, and Asia. As of March, 41% of PSP's portfolio remained allocated to US assets, double its exposure to Canada. But mounting uncertainty south of the border has prompted a reassessment of that weighting. US political dynamics, marked most recently by tariff shocks and proposed legislative changes targeting foreign pension investors, have injected fresh volatility into a market once viewed as stable ground. The world has changed, Ms. Orida said, referring to the growing complexity in managing risk across key developed markets. The proposed US One Big Beautiful Bill, which includes the removal of tax exemptions for foreign government-backed investors, could significantly impact Canadian pension plans with American holdings. PSP has already modeled the implications, concluding that while manageable, such policy shifts would influence future underwriting. I think the bigger impact would probably be on how much we want to incorporate it into our underwriting for future investments, said Ms. Orida. The legislation, still under Senate debate, has added new urgency to PSP's rebalancing strategy. Infrastructure remains one of PSP's strongest performing areas, returning 17.8% over the fiscal year. The fund has built out what it describes as platform-based investments, often taking operating roles in sectors like data centers and transportation. Last year, PSP's infrastructure activity reached $17.1 billion in combined commitments and exits,